Peter Eliades with you. This is Stock Market Cycles Update for the week ending May 22nd. This is May 25th, which is, of course, Memorial Day, and we honor all our loved ones that have passed, but especially the veterans that have done so much for our country, making the ultimate sacrifice. We have one or two of those in our own family, so we're well aware of the sanctity of this holiday, and we hope that you all appreciate what our veterans have done for us. God bless them all. Okay, this is going to be longer than usual update because we have a lot of things to say here. We're going to give you the projections on the weekly price charts, by the way. Some important upside projections were given as of this past Friday. You're looking at one of them now. We'll talk about it in a little bit. But first, I want to recognize the fact that those of you pioneers who took the initial trial at TradeStation are going to be running out in a couple of days here, your initial trial. And we hope that you've enjoyed the software. We hope that you're going to extend it and have to pay for it perhaps. But I want to tell you about a few of the incentives we want to give you to continue with the software. And for those current paid TradeStation subscribers, or if you should subscribe now over the next couple of weeks, take your free trial, try it out for 14 days. If after the free trial you remain with the software, with the application, I want you to know that there will be a new version coming out. We can't say when. It took us a year and a half to get this one started. So it may take several months, but when the new version comes out, and that one is going to be very exciting, as exciting as this one is already, because that one will be able to do reverse processes with projections. In other words, you'll be able to throw anything in there, an equity, an individual stock you like to trade, a commodity, gold, silver, whatever. You'll be able to put it up on the chart and do the reverse process, which will give you the best offsets to use. That's going to be spectacular. So I will now make you a promise that if you are one of these original pioneers that takes the trial period now and remains with us up until the time when the new software comes out, that you will get that brand new version of the software at the same price. That's not going to be the case when that new version comes out, that it will remain at the same price for those who are new purchasers of the upgraded version. So that's a very important benefit that you will get as an original purchaser. If you stay with us through the point where the new version comes out, I can't make you promises when it will be. It could be a few months, could be many months, I don't know. But it's going to be spectacular when we get it out and there. And you will not pay any additional money for the new version. Newcomers will. Okay, that's number one. Number two is, as soon as our website is up and operable, we're going to begin to transition from these free YouTube updates to the updates on the website, which will be paid for. If you retain your subscription, your paid subscriptions through that process, that should happen within just a few weeks now, when we transition from the free YouTubes to the paid videos that will be on the website. We will offer you a substantial discount for the paid videos on the website. So that is a pledge to you also if you are a paying customer at the time. So those are a few incentives we're trying to give those of you who are wondering whether you should retain your trial subscriptions or not. I would encourage you very much to do that because of those two options. For those of you that are wondering whether to begin with a new account at TradeStation so you can get the software right away, I want to remind you that as part of the offer from TradeStation, that you get a $1,000 discount on commissions for those of you that open new accounts at TradeStation and get this software. $1,000 commission discounts over time will actually pay for your software for almost a couple of years. So those are the offers, the special things I wanted to talk about. Now let's get to the market. This is a weekly chart. We're going to look at weekly projections now because the week is over. That's the time to look at them. And as we told you on the daily charts, I think we needed like one more day up at these levels. But the weekly charts are slightly different, as you can see. And let's show you the web chart for this. It will make it very clear exactly what we're looking at here. So here's the web chart. We'll zoom in a little bit on it. There we go. Couldn't be clearer. That's this past week, okay? Above the offset line, which gives us the projection that we just showed you. Now we're going to show you a couple of other things, especially for those of you that are now using the software. But I wanted to show this to you so you could see the projection calls for 34.50.43 to 37.30.11, okay? Now, what is that based on? Well, because we do weekly offsets, at least the first few sequences of them, the 2.5 week, 5 week, 10 week, 20 week, there's only one offset. So what we do to accommodate that one offset is we'll put in the actual offset, like 10 weeks, or in this case, 5 weeks. Actually, this one is 10 weeks. So you go 10 weeks, and then you'll put in 10 weeks and 10.01. So they're basically the same offset. And what we do is we allow for a 10% margin of error. For those of you that have the software now and are using it, let me show you how you work with that, because I'm not quite sure that I made this clear in the introductory video that I did. So you want to go to Studies, and then Edit Studies, and then here's the indicator, the Eliades cycle price projection indicator. We want to customize it. Now, when you're doing the weekly projections, you want a projection margin of 10%. That's the way the Hurst numbers were originally done. You do a 10-week offset, and you'd have an objective. Right now, that objective is 35.90.27, which is the midpoint of this rectangular box. And you add 10% above and plus or minus 10%. So you say 10% of what? Well, 10% from the low, which you measured from, which would be this March low, to the projected number. So in other words, you take this number just under 2,200, and you take a projection of 35.90, you're talking about approximately 1,400 points. You take 10% of that number, 1,400, and add it above and below the projection. Now, the only way you would change this projection margin in percent is with weekly charts. If you go back to a daily chart, make sure that you've taken off this margin of 10%. It should be back to zero, because the differences in the offsets, the shorter and longer offsets on the daily charts, usually makes up for this plus or minus 10% that we're talking about. As you note, when we do those charts, they're pretty good sized projection boxes depending on where you cross the first and the second offset. So this 10% margin of error you would use with the weekly charts, virtually all of the weekly charts, okay? But be sure, as I said again, that when you go back to daily, if you're using the same setup, you take the 10% off and go back to zero. The other thing we're not going to talk about now that we want to talk about in the near future is this Nick filter period. Sounds like something fancy, and you wonder what the heck we're talking about. And if I see some examples of that, I will show them to you. That simply means that if you give a projection and then you come back, take a look at this period right here. See, we have this projection and we didn't quite reach it, but we came just a tiny bit below. We nicked this area right here to the downside. So because of that, I would contend that this projection that uses this crossing point right here is still calling for this upside projection here, despite the fact that there were one or two nicks down here. And look what happened. Sure enough, we came up and fully met that projection despite the little nicks in here. So we'll talk more about those in the future, but I wanted to let you know what we were talking about when we said that. So now, the projection for the S&P, and it's given and confirmed now on the weekly chart, calls for 35.90.27, and the plus and minus parameters give us 34.50.43 to 37.30.11. Okay, that's on the S&P cash. Let's take a look at the Dow Jones Industrial Average now. Okay, here's the web chart on the Dow. This was the March low. You can see a very clear crossing here, and it crossed the way I like it to cross. If this were a sharp downward move for this week, this past week, and down here somewhere, but still above the line, I don't like that kind of crossing. I like it to be a firm, positive cross in the direction of the projection, and that's exactly what happened this past week, even though you have a small bar here. Now, mind you, you can still come down. You can see you can come down significantly over the next few weeks, down as low as the old lows, and still have this upside projection remain intact. But the projection for the Dow, which has been confirmed, is calling for 28,850 and change to 31,214 and change on the Dow. Now, you want to do a scary one? Let's look at the NDX. Okay, here is the NDX. I have to tell you, I mean, to me, this is incredible. I don't know how in the world, with the economic backdrop that we have and the whole world's economy being virtually stopped, how in the world is the NDX going to get up here? I don't know. Is it going to get up here? I don't know. I know there's a projection up there, and I know the projections tend to be accurate. Look at the last 5 or 6. This one hit to the downside. This one hit to the upside. This little one hit to the downside. This one hit to the upside. This one, you say, well, you missed that one. Yeah, look by how much you missed it. Right here, this tiny gap right here, you missed it. This one made to the upside. So the percentage accuracy is pretty darn high. No guarantee it's going to be made, but look how high this is. 10,635 and change to 11,493, rounded off to 11,494. Are we going to get way up there? I don't know, folks. I'm just giving you the projections, okay? So that's all I'm going to give you right now. I think that's enough. And we'll be watching with you over the next several days. We could get some kind of pullback here because coming into holiday periods, usually there's a tendency in the market to want to turn the other way. If it's in an uptrend, to go down at least a little bit and scare out a few of the cocky shareholders. But we'll see what happens over the short term. Whatever happens, we're going to be here. We're going to be showing you the projections, very short term, intermediate term, and long term. That's what it's all about. Thanks a lot for watching. If you have not subscribed yet, bottom right, subscribe, click on the red banner, click on the bell. You'll be notified every time we do an update. Have an enjoyable Memorial Day weekend, whatever is left of it for you, and we will talk to you on Tuesday evening. Thanks for watching.